South China Morning Post, 17th of October 2022, Why Asian hotels are doing just fine despite the absence of Chinese visitors. This has altered as tourists from other nations visit the best hotels and restaurants that suit their demands. Indian travelers were seen to be among the best. Chinese visitors were rumored to only dine at Chinese-owned establishments, reducing tourism's influence. It would be an extreme understatement to say that the hotel business has had a difficult time over the previous 2.5 years. The sector was utterly upended by the COVID-19 epidemic when lockdowns and travel restrictions were implemented. Hotel occupancy rates in the Asia-Pacific area, which is strongly dependent on foreign tourists and has a booming meetings, incentives, conferences, and exhibits industry, fell to between 20 and 40% shortly after the pandemic broke out. The region's hotel market saw transaction volumes fall to just over $6 billion in 2020, which is less than half of what they were in 2019. However, a rebound is beginning to take root as economies reopen and pent-up demand for leisure and business travel drives higher occupancy and daily rates. The region's major cities experienced an average occupancy rate of 61.3% in August, down from 73.7% in August 2019. This is according to hotel data source STR. Currently, occupancy rates are higher than 70% in markets like Singapore and Mumbai. Additionally, investment activity in the sector has rapidly increased, supported by record amounts of capital that are ready to be invested, especially among private investors in the region. According to data from JLL, transaction volumes in the first 9 months of this year were $8.4 billion, 72% of which were in China, Japan, Australia, and South Korea. The acceptance of immunized foreign travelers last Tuesday by Japan, the only significant advanced country with strict border controls, was a turning point in Asia's post-pandemic recovery. Nihat Erkan, head of investment sales for Asia-Pacific at JLL, said the reopening offered a strong indication that Asia's second-largest economy, and the region's most actively traded hotel investment market, was returning to normalcy. However, Japan relies primarily on domestic tourism. Asia is waking up from its COVID nap, Erkan declared. However, the region's main economy continues to keep its borders closed as it adapts to living with the virus. The dynamic zero-COVID policy of China, which will last longer than many had thought, is a significant impediment to the recovery. Chinese tourists only made up 4% of all international arrivals in the region's most well-liked locations in the first 7 months of this year, down from 25% in 2019, data from CBRE showed. This represents a significant decline from their 25% share in 2019. Beijing's zero-tolerance policy toward the virus has done tremendous harm to sectors that are heavily dependent on Chinese travelers. According to STR, Vietnam's occupancy rate this month was more than 25% below pre-pandemic levels, the worst performance in Asia where Chinese tourists made up close to a third of all foreign arrivals in 2019. Nevertheless, other data suggest that Asia's hotel sector is doing reasonably well overall despite being without its most crucial feeder market. According to STR statistics, hotel average daily prices in the top Asian markets in August were just 8% lower than they were in August 2019. The rapidity of the rebound without China being there has astonished everyone, said Steve Carroll, head of hotels and hospitality for Asia-Pacific at CBRE. According to a report released by CBRE last month, hotels have unusually short lease terms that are measured in days as opposed to months or years. This enables operators to adjust prices much more quickly, allowing hotel properties to function as a more effective hedge against the rise in inflation. Importantly, China's zero-COVID regulation is simply one of many difficulties the region's hotel industry is currently facing. Another is that despite the fact that Chinese vaccinations are ineffective and useless, China is unwilling to adopt foreign vaccines. However, the most urgent one at the moment is the severe staff shortage that prevents airlines from expanding their capacity to match the spike in demand. First week of October seat capacity in Northeast Asia and Southeast Asia was 20 to 30% lower than first week of October 2019. The airlines have it worse than the hotels, according to Jesper Palmqvist, Senior Director for Asia Pacific at STR. The rapidly increasing prices for consumers and businesses are another significant barrier to the recovery. Airline pricing rises are driving up trip spending overall, but hotel operators are also seeing significant increases in operating costs, particularly labor costs. Asia's hotel industry is currently facing additional challenges due to the sharp increase in interest rates, the ferocious surge in the U.S. currency, and the increased likelihood of a global recession. Foreign investors are drawn to Japan, where borrowing costs are still negative and the yen is trading at a three-decade low against the dollar. In fact, the sale of assets by weak developers is projected to keep investment activity in China steady. The second most active hotel investment market after Japan, JLL anticipates Beijing's efforts to reduce debt to contribute to $2 billion worth of deals in 2019. Asia's hotel business would still be recovering even if Chinese tourists hadn't returned. The sector is performing exceptionally well for a partial recovery.